The economy at this point does seem to be at a bit of an inflection point, and that makes sense with ever more widespread vaccinations, with strong fiscal policy, with continued support for monetary policy. You see the economy opening. You can see ridership on airplanes going up and people going back to restaurants. I think the March jobs report that we recently got shows what that can look like, which was close to 1 million jobs in a month. So I think we're going into a period of faster growth and higher job creation, and that's a good thing. I would point out there's still risks. In particular, I would say the main risk is that we'll have another spike in cases, perhaps in one of the virus strains that may be more difficult to treat. Now, we don't see that yet. We do see cases having moved up a bit, but that's something we need to be careful about, and I think we'd be wise to keep wearing masks and being socially distant at least for a while longer. Over time and in the longer run, the U.S. federal budget is on an unsustainable path, meaning simply that the debt is growing meaningfully faster than the economy, and that's by definition unsustainable over time. It's a different thing to say that the current level of the debt is unsustainable. It's not. The current level of the debt is very sustainable, and there's no question of our ability to service and issue that debt for the foreseeable future. I would also say, though, that as a nation, we will have to eventually get back to a sustainable path. That is something that is best done in very good times, when the economy is at full employment and when taxes are rolling in. This is not the time to prioritize that concern, but it is nonetheless an important concern that I believe we will ultimately have to return to, again, when the economy is strong.
Based on what you know today, you would not expect to increase interest rates before 2022, or you're just not saying that yet?
Well, before 2022, that would be this year. I think that would be highly unlikely. We have these persistent disparities, racial, gender, and other disparities in economic outcomes in our economy, and they kind of hold the economy back. You know, we all want an economy where everyone has the ability to contribute to and benefit from the prosperity that we have in our great economy. So really, our focus is on the gaps that we face, and we call them out. We talk about them. We've tried to incorporate into our monetary policy framework the thought that maximum employment, our statutory goal, is a broad and inclusive goal. That's a reference to those issues. And also, I think we now realize that unemployment can go low for quite a long time without inflation being a problem, which will also tend to help those groups. On that, I would just stress, of course, we can't be the primary policy organization that treats either climate change or inequality. We see it through the lens of our existing mandates, but those are very much issues for elected representatives and for other parts of the government. So the economy has really changed since those days. That's when I was in college, and I think people generally attribute the quarter of a century of low inflation that we've had to a number of factors. One is globalization, one is spread of technology, another is demographics and an aging population. All of those tend to lead to lower inflation. So what we have, in fact, since the global financial crisis for the last decade, you've seen central banks around the world really struggle to reach a 2% goal, and in some cases, are fighting outright deflation. The reason that's a difficult thing is that reduces the scope of central banks to react to the economy when it turns down, which can lead to still weaker economic outcomes, lower interest rates, lower inflation. So you can get into a cycle, if you will, that's not a productive one. So we really want inflation to be at 2%. We want it to average 2% over time. And that means that we want to overshoot 2% after we've been through a period moderately and for some time after we've been below 2% for a while. We think of them more as crypto assets because crypto, what people call cryptocurrencies, they're really vehicles for speculation. No one is using them for payments, for example, like the dollar. What they're using them for is to speculate. It's a little bit like gold. For thousands of years, human beings have given gold this special value that it doesn't have from an industrial standpoint, but nonetheless, for thousands of years, they've done that. So Bitcoin is much more like that, and the cryptocurrencies are much more like that. They're not really being actively used as payments. I think the first thing to realize is that the structure of the economy is always changing. So the economy that we had back in college was one where low unemployment led to high inflation, and inflation stayed high. It's very different now. And so we have to constantly update our thinking about the way the economy actually works. Now, bringing that to the present, we're coming back to a different economy. It's not going to be the same economy as the one we left. And
the Federal Reserve System is still operating largely under the initial statutes, and that basically the way that it was structured then is more or less the way it operates today. Is that a surprise to you? And if you were sitting down today and given the power to redo the way the Fed operates, is there something you would suggest maybe could be improved?
You know, this was the third try at a central bank in the United States. There was the first Bank of the United States and the second Bank of the United States. And they basically failed because people didn't want to bestow a lot of power on a government agency in a major city on the East Coast. They were, the agricultural interests and the big country, they just weren't comfortable with it. In any case, both of those died after about a quarter of a century each. And then there was a long time without a central bank. The reason this one succeeds and is thriving, I think, is because we're a balance between a board of governors here in Washington, nominated by presidents and confirmed by the Senate with terms that are not coterminous with presidential cycles. So we're non-political, we're not part of the political cycle, but also 12 reserve banks all around the country who are deeply grounded in their communities and understand their communities, the states and the cities and towns where they are. So it's a much more balanced and sustainable model. And I think it really works. And I think, I think because of that, we keep in better touch with the whole country and what's going on in the whole country. So I wouldn't change. There isn't a fundamental thing about the Fed I would change. Really, I think it's a great model for this very large country with quite a disparate economy and different regions and states. So I think it works.